Welcome to the Economist Corporate Network's webcast series, sponsored by Oracle. My name is Vanessa Barchfield. I'm the editor of the Corporate Network in Central and Eastern Europe, the Middle East, and Africa. After teetering on the verge of collapse in late 2008 and early 2009, many of the world's major banks have returned to record profits and have repaid government loans. I asked the EIU's senior financial services editor, Jason Carrion, if their performance is a sign of a sustainable recovery or if another Lehman Brothers could be looming.
My answer to your question is yes and no. Basically, all banks we saw were affected equally badly by the downturn, and now during the upturn, we've seen very widely diverging fortunes. So in many countries in the developed world, you see a two-tier system developing. So there's a handful of banks, often just one or two, at the top, the winners, if you will, and they are recording record profits, paying back any extraordinary support that they got, if they got any. And then there's a whole sort of huddled mass of also-rans and outright basket cases, basically, mostly among the smaller and medium-sized lenders. So we're really seeing this kind of quite confusing period where as the upturn comes, banks are affected in widely different ways. And how that plays out in terms of the whole banking system, it's hard to tell. We definitely have very clear winners and very clear losers.
There's still a lot of concern about the scale of sour debt being held by banks. How serious is that problem, and what are banks doing to buffer themselves?
Sure. Again, it's worse in some places than others, but as we have generally seen across numerous business cycles, non-performing loans tend to lag the economic cycle. So basically, everything you hear from the banks, and in most countries, we expect to see non-performing loans continue to rise a bit, even though we've seen economies recover. But I know that commercial real estate, for example, is very scary for lots of bankers out there. So we'll definitely see more rising non-performing loans, and in response, basically, any sort of balance sheet expansion is off the cards at most big banks.
Mm-hmm. Looking to our region, Austrian, Greek, and Italian banks were very heavily exposed to Central and Eastern Europe. How have those banks fared in the region, and how do you expect their performance to be in the coming years?
Right. Again, you have to look at it almost on a case-by-case basis. I think very early on during the credit crunch, banks in the Eurozone, for example, the Italian or Austrian banks, there was a lot of worry in those economies that those banks' forays into Eastern Europe would crimp credit back home. So, for example, the Italian and Austrian banks in Hungary or Ukraine or Russia, that the problems there, and there are still some pretty severe problems, would then crimp credit back home. As we've gone through the financial crisis a bit more, now we see some of the concerns flowing the other way. For example, in Bulgaria, which has a huge presence of Greek-owned banks, Bulgarian officials are now very worried that the Greek banks' problems, the problems in the Eurozone, will now be flowing and crimping the flow of credit there. So it kind of depends, the sort of which direction you're looking at. I think a notable exception here is Poland, which is quite proud of its record as the only EU economy not to contract during 2009. And its banks are, as you would expect, doing relatively well, especially when compared to their, say, Hungarian or Ukrainian neighbors.
And looking a little bit further east, Russia has over 1,000 banks, many of which are very small and very regional. Do you expect much consolidation in the Russian banking sector?
Right. Well, I think consolidation has been on the cards for years, if not decades now. It seems inevitable, but it seems that the pace of reform on this, there's been plenty of noises from officials about rationalizing the banking system, about raising minimum reserve requirements, shareholder equity requirements, this sort of thing. But it just seems to be going very slowly. There's no real kind of big bang of when that 1,000, more than 1,000 banks in Russia comes down to a level more akin to, say, Brazil. Its sort of BRIC counterpart has 100-something commercial banks. And that said, Sberbank is so huge in Russia and has such a major effect that there is cause for optimism for the system as a whole, in that the bank seems to be doing relatively well. It's expanding its balance sheet a little bit, extending more loans, and clearly as a massive state-owned lender, the government is keen to keep that going. So definitely expect rationalization, consolidation at some point, not quite sure when. But in the meantime, the banking system as a whole seems to be performing relatively well, especially compared to, say, Ukraine next door, given that it has this very large dominant lender that obviously has Moscow's ear.
How different will the global banking sector look in 5 or 10 years?
Right. Well, very easy question. I think it will definitely be a much less profitable, less sexy business, if you will. Regulators are very keen to take it down a peg, to make banking less important as a sector in their national economies. It as a share of GDP, the financial services industry got way out of whack, I guess you could say, and basically every new reform being proposed now, both at a national, regional, and world level, is basically meant to kind of put banks back in a box of just doing simply their core lending business and relying on that net interest income. That's supposed to be their sort of raison d'etre, but got lost when they got so self-referential during the subprime mortgage boom, and we saw CDOs and all this kind of stuff. And so I think going forward, it's meant to be a sort of more modest, humbler, less profitable industry. Whether that actually happens, because it's a very powerful lobby, world lobby. Whether regulators can actually make that happen is very much an open question.
Well, thank you so much for joining us.
Of course.